Welcome to the EveryBiz Daily podcast. Today, we're doing a deep dive into the latest year-end report from Reinet Investments S.C.A. Now, they're a Luxembourg-based investment firm. And for you, our listener, if you want the key insights without, reading the whole dense report, well, that's our mission today. We're pulling out the most important financial highlights from their consolidated, audited financial results for the year ending March 31st, 2025. Think of Reinet as a way to get indirect exposure to a pretty diverse portfolio managed by Reinet Fund S.C.A. They're listed in Europe and South Africa, too. So what's the sort of headline news from this report?
Well, the big headline is definitely strong growth. Reinet's net asset value, or NAV, that's essentially, the value of all their investments minus liabilities, it hit $6.9 billion.
Okay, $6.9 billion. How does that compare to last year?
That's a pretty significant jump, almost 12%. 11.8% to be exact, up from $6.184 billion the year before.
Right. That NAV growth, it sounds like more than just market uplift. Maybe some smart moves in there.
Exactly. It reflects things like the big baby sale we'll probably talk about, but also good underlying performance in key holdings like Pension Insurance Corporation. It signals a pretty robust strategy overall.
And how does that NAV growth translate into value for Reinet's shareholders, for you listening?
It translates directly, really. The NAV per share climbed to 38.04. That's up from 34.02.
Okay.
So for you, that increase just directly shows the growing value of your indirect piece of Reinet's investments. And what's quite interesting is the long-term view.
Yeah.
Since March 2009, Reinet's NAV has actually grown by an average of 9% per year. And that's even including the dividends they've paid out over time.
9% compound annual growth. That's solid over that time frame. Okay, let's unpack the moves then. What were the key investment decisions that really drove this growth?
Right. Well, the really big one was they completely sold off their remaining stake in British American Tobacco, BAT.
Oh, wow. The whole thing?
The whole remaining lot. Yeah, over 48 million shares. And that brought in $1.627 billion.
Okay, that's a huge divestment. They held B up for a long time, right? What does exiting that signal, and how did that investment actually do for them overall?
It did very well for them. Over the years, it gave them an annual return of over 11%. Plus, they received over $2 billion in dividends from B alone.
$2 billion in dividends.
Yeah. So selling it now, it frees up a massive amount of capital.
Yeah.
For Reinet to put to work in potentially new areas. Yeah. Suggests maybe a bit of a strategic shift.
Makes sense. Besides that huge sale, what other significant income came in?
Well, they also got a very substantial dividend payment from Pension Insurance Corporation Group Limited. That was $235 million just this year.
Okay, $235 million from PIC. Speaking of dividends, what about Reinet itself paying out to shareholders? What can you, the listener, expect?
So Reinet paid out 0.35 per share during the year that just ended. And looking ahead, they're proposing an increase.
Oh, an increase?
Yeah, to 0.37 per share. They'll vote on that at the shareholder meeting in August. That's about a 5.7% bump.
Almost 6% increase proposed. Good news for income investors there. All right, let's quickly touch on how their other key investments are doing. Pension Insurance Corporation, you mentioned the big dividend. How's its value holding up?
PIC's value actually increased. That was driven by record new business they wrote, apparently their biggest ever year for that. Plus those dividends we mentioned, and also market multiples went up.
Market multiples, meaning?
Essentially how much the market values similar insurance companies. So higher multiples suggest, increased confidence in that sector. And Reinet kept their stake steady at 39.5%.
Right. And what about their private equity side?
Private equity showed kind of varied performance. Some funds are focusing on, strategic growth and getting investments ready to sell monetization. Others, like TruArc, they committed to a new fund and saw some positive results. So quite active management there.
Okay. And Asia, any highlights there?
Asia was a bit of a mixed bag, really. Milestone China saw a decrease, but Prescient China did well, helped by market improvements. And Asia Partners is focused on Southeast Asia growth.
Got it. Any other areas to quickly mention? Specialized funds or other investments?
Yeah, their specialized fund, Nano Dimension, its value decreased, which kind of reflects the broader tough market for venture capital right now.
Right, the VC pullback.
Exactly. And their U.S. land development and mortgages were impacted by the slowdown in the housing market there. Housing slows, land and mortgage values tend to follow.
Okay, understood. So turning to Reinet's overall financial health, beyond individual investments, how are they positioned now, especially after that big BAS sale?
they're in a very strong position, financially speaking. Their cash and liquid funds have shot up significantly. It's over $1.8 billion now.
Wow, $1.8 billion in cash.
Mostly thanks to that bad sale, yeah.
Yeah.
And importantly, they've also paid off all their bank borrowings. Zero bank debt.
Okay, so tons of cash, no debt. That gives them a lot of flexibility. What's their thinking on the market right now and deploying that cash?
Well, the chairman's commentary points to, increased market volatility and uncertainty around the world, geopolitical stuff, economic shifts.
Yeah, that sounds familiar.
Right. So as a result, Reinet's planning to be pretty measured, quite cautious when it comes to deploying that capital into new investments.
Okay, so let's recap the key takeaways for you, the listener. It sounds like strong growth in Reinet's underlying value, a really successful exit from that huge BD holding, significant dividends coming in, plus a proposed dividend increase for shareholders, and a cautious but very well-funded approach to the future given the uncertain market.
That sums it up nicely. And just to put some numbers on the long term for investors, since Reinet started back in 2009, the average annual return based on the share price has been about 8.1%, and based on that NAV growth we talked about, it's been 9.0%.
Right. So here's something for you to think about. Reinet has made this major shift, right? Moving away from being so heavily reliant on the AT, building up this diverse portfolio, and now sitting on a huge pile of cash. What do you think their next big strategic move might be? What kind of global trends or sectors might they be looking at for that next major investment?